The banking system is designed to keep you broke. You overdraft by $3. The bank charges you $35. You needed that $3 to buy milk. Now you're negative $35. So your next deposit gets eaten by the overdraft, which means the bill you needed to pay bounces. That's another $35 fee. You're now $70 in the hole because you were $3 short. And somewhere, a bank executive is getting a bonus because overdraft fees are up this quarter. This isn't an accident. This isn't bad luck. This is the system working exactly as designed. Banks make more profit from poor customers than rich customers. And today, I'm going to prove it with the actual numbers, show you exactly how the system is rigged against you, and give you the specific steps to stop being a profit center for banks. Let me tell you about James. He works full-time making $15 an hour. Brings home about $24,000 a year after taxes. He has a checking account at a major national bank. He's not irresponsible. He tracks his spending. He knows what's in his account, but the math is tight. His paycheck comes every 2 weeks. His bills don't line up perfectly with his paychecks. Sometimes rent is due before payday. Sometimes the electric bill auto-withdraws on the wrong day. He's constantly juggling. Last month, here's what happened. His account had $217 in it on a Thursday. He knew his paycheck would direct deposit Friday morning. He had to buy gas to get to work, $42. That left him with $175. He bought groceries, $63. That left him with $112. Then he forgot about the subscription he signed up for 3 months ago. Streaming service, $14.99. Auto withdrew Thursday night. Account balance now $97.01. Friday morning, his insurance payment auto withdrew. $123. He thought it was scheduled for next week. It wasn't. Account balance negative $25.99. The bank charged him a $35 overdraft fee. Account now negative $60.99. His paycheck deposited later that morning, $800. But the bank takes their negative balance first. So his available balance is now $739.01. Except the insurance payment from yesterday bounced because it overdrew the account. The insurance company charged him a $25 returned payment fee and resubmitted the charge. That's another $123 out. Balance now $615.01. But because the insurance payment bounced, the bank charged another $35 fee. Balance now $580.01. He started the week expecting to have $800 after his paycheck. He ended with $580. That's $220 in fees and penalties because his insurance payment auto withdrew 1 day before his paycheck arrived. $220. That's almost 15 hours of work, gone, not because he was irresponsible, not because he was reckless, but because the bank system is specifically designed to maximize fees from people living paycheck to paycheck. And here's the part that will make you furious. If James had $5,000 in his account instead of $200, this never would have happened. The overdraft wouldn't have occurred. The fees wouldn't have triggered. The insurance wouldn't have bounced. Having money protects you from the fees. Not having money makes you pay more. The bank charges poor people for being poor. And they make billions doing it. Let us break down exactly how much banks extract from poor versus rich customers, because when you see these numbers, you'll understand this isn't a service industry. It's extraction. We're going to compare 2 customers at the same bank. Customer A has an average balance of $500. Customer B has an average balance of $50,000. Let's calculate how much profit the bank makes from each over 1 year. Customer A, the $500 balance customer. First, monthly maintenance fee. The bank requires a $1,500 minimum balance to waive the $12 monthly fee. Customer A doesn't have that. $12 per month, $144 per year. The bank's actual cost to maintain the account is maybe $2 per month in infrastructure and processing. So they're making $10 per month in pure profit. $120 per year profit from the monthly fee alone. Overdraft fees. Customer A lives paycheck to paycheck. Tight budget. Things happen. They overdraft an average of 4 times per year. That's $35 per overdraft. $140 per year. The bank's actual cost to process an overdraft transaction is essentially zero. It's automated. No human involvement. $140 in pure profit. Insufficient funds fees. When a payment bounces, the bank charges both an overdraft fee and an NSF fee if multiple transactions hit. Customer A has this happen twice a year. That's another $70. Pure profit, ATM fees. Customer A doesn't have a branch nearby their work. Uses out-of-network ATMs. $3 per transaction, twice a month. That's $72 per year. The bank's cost is zero. They actually make money from the other bank's ATM network fee too, but will be conservative. $72 profit. Paper statement fee. Customer A doesn't have reliable internet, gets paper statements. $5 per month. $60 per year. Cost to the bank, maybe 50 cents in printing and postage. They're making $54 in profit. Minimum balance fee on savings. Customer A tries to save. Has a savings account with $87 in it. Bank requires $300 minimum or charges a $5 monthly fee. That's another $60 per year. Pure profit. Wire transfer fees. Customer A needs to send money to family once a year. Wire transfer fee, $30. Bank's cost, about $2. $28 profit. Let's add it up. Monthly maintenance, $120 profit. Overdraft, $140 profit. NSF fees, $70 profit. ATM fees, $72 profit. Paper statements, $54 profit. Savings minimum fee, $60 profit. Wire transfer, $28 profit. Total annual profit from customer A, $544. On a customer who has an average balance of $500, the bank is making 109% annual return in fee profit alone. That doesn't even count the interest they're not paying on the balance. Now customer B average balance $50,000. Monthly maintenance fee, $0. They exceed the minimum. Overdraft fees, $0. They have plenty of cushion. NSF fees, $0. They never bounce. ATM fees, $0. They get unlimited free ATMs. Paper statement fee, $0. They opted for electronic. Savings minimum fee, $0. They exceed all minimums. Wire transfer, maybe once, but often waived for high balance customers. Let's say $30 to be generous. Total annual fees from customer B, $30. But wait, the bank is paying them interest on their balance. At current rates, about 0.5% on $50,000 is $250 per year. So the bank is net negative $220 on customer B in fee profit. But the bank makes money from customer B in a different way. They lend out customer B's deposits. That $50,000, the bank can lend it out at 6%. That's $3,000 in revenue. Their cost of funds is the 0.5% interest they pay, which is $250. So they're making $2,750 in net interest margin. Minus the $220 in fee costs, they're making $2,530 in actual profit from customer B. Now compare. Customer A with $500 balance generates $544 in fee profit. Customer B with $50,000 balance generates $2,530 in total profit. Sounds like the bank makes more from the rich customer, right? Wrong. Look at the return on balance. Customer A, $500 generates $544 in profit. That's 109% return. Customer B, $50,000 generates $2530 in profit. That's a 5% return. The bank makes 22 times better return on poor customers than rich customers. If the bank could choose to have their whole customer base be paycheck-to-paycheck customers, With small balances, they would make more money. The only reason they court wealthy customers is because they need the deposits to lend out. But on a per-dollar basis, poor customers are vastly more profitable. And here's the really dark part. The bank knows exactly what they're doing. They have data scientists who calculate the optimal fee structure to maximize extraction from low-balance customers without causing them to leave. They know that someone living paycheck to paycheck can't easily switch banks. Where would they go? All banks do this. They're trapped, so the banks can charge whatever they want. And they do. Let me show you the industry-wide numbers. Americans paid $31 billion in overdraft and NSF fees last year. $31 billion. The cost to banks to process these transactions is close to zero. It's almost pure profit. And who's paying it? 85% of overdraft fees are paid by people living paycheck to paycheck. 9% of account holders pay 79% of all overdraft fees. The banks have identified the most financially vulnerable customers and turned them into profit centers. So how did we get here? How did banks go from institutions that hold your money safely to predatory extraction machines? Because the system was deliberately designed this way through deregulation, fee structures, and legal tricks. Let me walk you through exactly how this happened. First, let's talk about overdraft fees and how they're designed to maximize extraction. Before 2010, banks could automatically enroll you in overdraft protection without asking. They de-protect you by covering transactions that would overdraft your account and charge you $35 for the service. Sounds helpful, right? Except here's the trick. They would reorder your transactions to maximize overdrafts. Say you have $100 in your account and make 5 transactions in one day. $10, $15, $20, $30, and $70. In the order they occurred, only the last transaction would overdraft. That's one $35 fee, but the bank would reorder them. Process the $70 one first. Balance now $30. Then the $30. Balance now $0. Then the $20. Overdraft, $35 fee. Then the $15. Overdraft, $35 fee. Then the $10. Overdraft, $35 fee. Same transactions, reordered to create 3 overdrafts instead of 1. $305 in fees instead of $35. This was legal. Banks made billions. In 2010, regulations changed. Banks now have to get your consent for overdraft protection on ATM and debit transactions. But most people still opt in because the banks make it sound like you'll be stranded without it. And the reordering still happens in many banks, just in less obvious ways. Second, let's talk about minimum balance requirements. Banks require you to keep a certain balance to avoid monthly fees. Sounds neutral, but think about what this actually means. If you're rich and have $1,500 sitting in checking anyway, you pay 0 fees. If you're poor and living paycheck to paycheck, you can't maintain $1,500 in checking because you need that money to survive. So you pay $12 per month. You're being charged for being poor. And here's the scam within the scam. That $1,500 minimum, you're not earning interest on it. The bank is paying you maybe 0.01%, but they're lending it out at 6%. They're making $90 per year on your minimum balance while paying you 15 cents. You're subsidizing the bank to the tune of $90 per year. And if you can't afford to subsidize them, they charge you $144 per year in fees. It's extraction either way. Third, the way banks calculate available balance is deliberately designed to confuse and create overdrafts. You check your balance on the app. It says $200. Great. You spend $40, but that $40 charge hasn't cleared yet. It's pending. Your available balance is actually $160, but the app still shows $200 in your account. So you spend another $50 thinking you have cushion. Now you're actually at $110 available balance. Then a charge from 3 days ago clears that you forgot about, $65. Now you're at $45 available, then your rent auto withdraws. You thought you had 200. You overdraft. Fee. The bank has real-time information about your actual available balance. They could show you that. But they intentionally show you the higher number because it increases the likelihood you'll overdraft. This is deliberate design to create fees. Fourth, the timing of deposits versus withdrawals. Your paycheck direct deposits Friday morning. The bank receives the electronic deposit Thursday night. They could credit your account Thursday night. They choose to credit it Friday morning. Your rent auto withdraws Friday morning. The bank processes withdrawals before deposits on the same day. So even though your paycheck and rent both hit Friday, the rent processes first. You overdraft for a few hours. They charge you $35. Then your paycheck clears. You had the money. They just processed it in the order that generated fees. All of this is legal. It's in the fine print you agreed to when you opened the account. The terms of service are 70 pages of legal language designed to give the bank maximum flexibility to extract fees. Fifth, let's talk about the lobby industry. Banks spend hundreds of millions on lobbying to keep this system in place. Every time there's a push for regulation, for fee caps, for consumer protection, the banking industry floods Congress with money and lobbyists. They've successfully fought off caps on overdraft fees. They've successfully fought off requirements for real-time balance transparency. They've successfully fought off bans on reordering transactions. And they use the same talking points every time. Overdraft protection is a valuable service customers want. Fee caps would force banks to stop serving low-income communities. Regulation would stifle innovation. All of this is gaslighting. Overdraft protection is a $31 billion profit center built on the backs of the poorest Americans. Fee caps would hurt bank profits, not customer access. And the only innovation banks are doing is finding new ways to extract fees. Sixth, the alternative financial services industry exists because banks refuse to serve the poor. Check cashing places, payday lenders, prepaid debit cards. All of these exist because traditional banks have made it impossible for low-income people to have basic banking. And then banks point to these alternatives and say, "See, we're better than payday lenders." But they created the market for payday lenders by refusing to offer reasonable services. The system isn't broken. It's working exactly as designed. Designed to extract maximum profit from the most financially vulnerable people. Designed to make poor people pay more for basic financial services than rich people. Designed to create poverty traps where a $3 shortage becomes a $200 disaster. And it's all legal. All right, so you're trapped in a system designed to extract fees from you. Every major bank operates this way. What do you actually do? Because I'm not going to tell you to just keep more money in your account. If you could do that, you would. You need specific strategies to stop being a profit center for banks. First, switch to a bank or credit union with no overdraft fees and no minimum balance requirements. They exist. Online banks like Chime, Ally, and Discover have no monthly fees, no minimum balance requirements, and no overdraft fees. Credit unions almost always have better fee structures than big banks. The reason you're still at a big bank is probably because you've been there since you opened your first account and switching seems hard. It's not. It takes about an hour. Do it this week. Here's how to switch without disrupting your finances. Open the new account. Transfer a small amount to test it. Set up direct deposit at the new account. Keep the old account open for one more pay cycle to make sure everything transfers smoothly. Once you confirm direct deposit is working and all your auto pays are switched, close the old account. Make sure it's at zero balance when you close it so they can't hit you with a final fee. Second, opt out of overdraft protection completely. Call your bank right now and say, "I want to opt out of all overdraft protection services on my checking account." They'll try to talk you out of it. They'll say you might be embarrassed if your card gets declined. Better embarrassed than broke. When you opt out, if you don't have the money, the transaction just gets declined. No fee. Yes, it's awkward. But awkward is free. Overdraft fees are $35. Third, use cash for variable expenses. This sounds old-fashioned, but it works. Calculate your fixed expenses, rent, insurance, subscriptions, utilities. Set up auto pay for those from your main account. Then for everything else, food, gas, entertainment, withdraw cash weekly. When the cash is gone, you're done spending. Cash is tangible. You physically see it leaving your hand. It creates natural spending awareness that debit cards don't, and you can't overdraft cash. Fourth, set up account alerts. Most banks let you set up text or email alerts when your balance drops below a certain amount. Set it to alert you when you drop below $100. That gives you awareness before you hit zero. The bank doesn't advertise this feature because they don't want you to use it, but it's usually in the app settings under notifications or alerts. Fifth, use a separate savings account for irregular expenses. You know you have car insurance twice a year, $600 each time. That's $50 per month you need to set aside. Create a separate savings account. Set up automatic transfer of $50 per month into it. When the insurance bill comes, the money is there. This works for any irregular expense. Christmas gifts, car repairs, annual subscriptions. Budget them monthly, save in a separate account, spend when they come due. This prevents the surprise expenses that create overdrafts. Sixth, get paid early if possible. Some employers and some banks offer early direct deposit. Instead of waiting until Friday, you get paid Wednesday. That's 2 extra days of float. Those 2 days can be the difference between overdrafting and not. Check if your employer offers this. Check if your bank offers this. It's usually free. Seventh, use a budgeting app that connects to your account and shows real available balance, not the inflated balance the bank shows. Apps like YNAB or Mint track pending transactions and show you what you actually have available to spend. The bank's app is designed to confuse you. Third-party apps are designed to help you. Eighth, build a tiny buffer, even if it's just $50. I know this is hard. I know if you had $50, you'd use it for something else. But $50 in your account is the difference between one overdraft fee and not. One overdraft fee is $35. So that $50 pays for itself the first time it prevents an overdraft. This isn't about building an emergency fund. This is about creating enough buffer that a $3 mistake doesn't become a $200 disaster. Ninth, if you do overdraft, call the bank immediately and ask them to reverse the fee. Be polite. Say this was a one-time mistake and ask if they can waive the fee as a courtesy. If you've never called before, they'll usually reverse 1 or 2 fees per year. It's not guaranteed, but it costs you nothing but 5 minutes to try. The worst they can say is no. The best is they refund $35. 10th, understand that you're not the problem. The system is the problem. You're not bad with money because you overdraft. You're living in a system specifically designed to extract fees from people in your situation. The shame you feel about overdrafting is the shame they want you to feel, so you do and get angry and demand change. Get angry instead. Here's what I need you to understand. Banks make 109% return on customers like you through fees. They make 5% return on wealthy customers. You are more profitable to them than rich people. That's not because you're irresponsible. It's because the entire fee structure is designed to extract money from people living paycheck to paycheck. James paid $220 in fees because his insurance withdrew 1 day early. That's not a service failure. That's the system working perfectly to maximize bank profit. The bank made $220 in pure profit from James's poverty. Multiply that by millions of customers. That's $31 billion per year extracted from the poorest Americans to pad bank profits and executive bonuses. This isn't capitalism, this is extraction. Capitalism is voluntary exchange where both parties benefit. You get no benefit from overdraft fees. You get no benefit from monthly maintenance fees. You get no benefit from NSF fees. These aren't prices for services. They're penalties for being poor. The bank provides the exact same account services to a rich customer for free that they charge you monthly for. The only difference is you're poor and they can extract fees from you. The system is designed to keep you broke. Every fee is a setback. Every overdraft is money you could have used for food, for gas, for getting ahead. Instead, it goes to bank profits. And the banks lobby to keep the system exactly this way because you are their most profitable customer segment. So here's what I want you to do. This week, take one action, just one. Switch banks, or opt out of overdraft protection, or set up balance alerts, or withdraw cash for variable spending. Pick one, do it. Each action reduces the amount the bank can extract from you. And then, get angry, not at yourself, at the system. Vote for politicians who support overdraft fee caps. Support credit unions over big banks. Talk about this. Share this video. The banks count on you feeling ashamed and isolated. But there are millions of people paying these fees. When we understand it's systemic, not personal, we can demand change. The banking system is designed to keep you broke. But you don't have to cooperate. Take their profit center away. Stop letting them extract fees from your poverty. You deserve basic banking services without being nickeled and dimed into deeper poverty. Fight back. I'll see you in the next one.